see, I make a mess of these charts. I love charting GRT. And yeah, we're going to go right on it. So we're going to go to the beginning of the chart. Okay. So how I draw my support resistance on the macro time frame, you don't have to do it this way, but this is a sufficient way that I've figured out on how to draw support resistance. I've been doing this for years, right? Not every chart you can do this with, but going back onto your data is the best way that you can pull what's going to happen in the future. Going back to the past of GRT, you could then play the future price action of it. You don't have to do this, right? There's other ways to seek it. Like I can look at reactions. The way that I do it, you're going to be able to seek brand new coins within the future and play future price action. So what do I mean by that? I'm going to bring the replay button back to GRT, right? So let's say this is a brand new coin. It's not GRT. Let's say this is just a random coin in the bull market. Things are moving up and we're trying to chart this coin. How are we going to do it? Well, we're going to open up the chart. We're going to bring it back to the first signs of price action, and we're going to bring out our horizontal lines because this is going to be able to draw a line throughout your whole chart. So you're never going to have to draw a line again. And we're going to draw a horizontal line under your candle closure, on top of your candle closure, and on top of your candle wick. GRT moved up very impulsively. So the candle wicks and candle closures might not look a lot, but this candle closure to this candle wick is about a 20% move. So the reason I draw this is because we're creating a little bit of a range for when price comes back, we know how to play it, right? So again, right here, we're going to draw another line on top of this candle closure and another line on top of this candle wick, okay? Because we know that when price comes back, this is going to be a significant level that people are willing to play around because significant price action happened around here in order for the price to do something. Does that make sense, guys? People were trading around this candle closure in order to push the price up. So when price comes back, people are going to be looking at this price action because this was a significant point where players in the market were doing business. What I want you guys to write now is do not use a candle closure as a means to enter a position. Use it as confluence to enter a position. So always look at your candle closures and candle wicks, but don't use it as the only thing you're using to enter a position. Use it as confluence to enter a position. Okay. All right, beautiful. So everyone's following along. We're going to keep moving up. We're going to keep moving up. Again, right up here, we're going to draw it on top of our candle closure and on top of our candle wick. And once more on top of this candle closure and this candle wick. And we know that the price tops off right here. So we're going to draw this as a different line. We'll change the colors to red. Just because we know that when the price comes back up, we know this is an all-time high level. All-time high flips are generally very, very, it's going to be a lot more aggressive than it would on other types of entries. Because when all-time high flips, the price then goes into price discovery. I want you guys to get familiar with the term price discovery because you guys aren't in a bull market now, so you guys don't really know what price discovery is. Price discovery is when the price keeps discovering a new price. So when the price keeps discovering a new price, there's no resistance. So the price is able to go very high, okay? The only type of resistance that people have are Fibonacci extensions. And yeah, they work, but they might be higher than what you anticipate. So when prices in price discovery, the reason why all-time high flips are very aggressive is because once prices in price discovery, you basically have an entry that could take you up however high people want to push the price up, okay? So now what I want to do is I want to scroll out and I want you guys to see what happened. So just by looking at the price here, what do you think happened? So by looking at price, what do you think is happening here? We're moving up, we're moving up, we're moving up impulsively. And the first sign of resistance is right here. This is the first real sign of resistance in the prices right here. Because we moved up from the bottom to the top here, we're up 1,900%. Like I said, it might not look like a lot, but this is a lot. In a few days' time, this is a lot of movement upwards with very, 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 very minimal price action. And then once we get to this wick, we get a significant rejection in the price, right? So we know that supports are kind of weak around here. So the real significant area of support is right here. It might not get there, but this is the real significant area. Can you try this level? Sure, but you want to wait for a reaction. And we know that the price reacts around this level, right? It will reject. That's what happened. And the candle closes below this line. What I want to do in this class is I want to show you step by step, drawing every single level accordingly, and then taking every position that you could have taken. So within these last candles, we're not playing these candles on the macro time frame. There's no real position that you could have taken here on the macro time frame. Yeah, you could have taken the flip of every daily closure. That's fine, but that's very, very aggressive and very high risk, and that's not technically a macro play. We're going to go over every macro play that you could have taken. So what play would you have taken over here? If you're just looking at price action and you see that we closed the daily below this level, what position are you taking? Think, which way is the trend? Is the trend reversing due to that reaction? And if I'm looking to position myself, where am I positioning myself? Am I looking for am I looking for a long? Am I looking for a short? Am I looking a market? Am I looking a limit? What are you doing here at this very point? Okay. So what we're going to do here, we're not looking to short because the candle closes below. Remember, don't enter a position solely based off of a candle closure. Think logically. If the price, think like a player in the market. Other people are playing the market as well. If the price moved up 2,300 plus percent, the price just rejected 41%. Do you think they're going to let people get away with a free short right here because the candle closed below one candle closure right down here? Do you think they're going to let people get away with a clean short right here? Absolutely not. Do you think that you could long here? Sure, you could long here, but it's more risky to long here than it was right here, right? So what are you going to look to do? Price should reverse. Watch for the next candle, expecting a push. Okay, beautiful. Okay, a lot of good answers. So on the lower time frame, sure, you could look for this to regain. You could long up to here, sure, but ultimately the trend seems to be reversing. So I'm looking for a short right over here, assuming we're going to put in a bearish retest or a move down, and that's the only move I'm looking for. Macro. Now, on the lower time frame, you can look for acceptance above this level for a long up to this level. Intraday, there's no problem with doing that. But macro-wise, we're looking for a push up to a push down. And how am I going to play that? A little bit below your resistance, a little bit on it, and heaviest bids above, because you don't know the reaction you're going to get, and you'll play it like that. So you'll get a move up, a move down. That's what I'm anticipating. That's what I'm looking for. Have a plan in place before the price reacts. You got to think like a player in the market. If you're thinking like a player in the market, you got to think logically. Most people don't think logically. That's why most people lose money. When you're playing this market, you got to take a step back and think logically. If you feel like you have to rush into a position, odds are it's not a winning position. So what I think is going to happen is it's going to move up for a bearish retest and then move down. The price came up. What happened here, guys? The price came up, literally retested the same line we drew, put in a bearish retest before going down lower. A bearish retest is when the price slices through a support, you lose support, that same support retest for a short. That's what a bearish retest is. So it's just confirming the flip of support into resistance. That's all it's doing. So we know now that if this retest confirms successful, that this is no longer support. This is now resistance until it's flipped. You don't take longs until this level is flipped. Same as this level, same as this one, and everyone thereafter. That's why I said this is your main level you're looking to get long, especially after this reaction. Now what's going to happen here? So our big level to long is down here. But in between this level to this level, there's going to be somewhere that reacts as support in an 82% range. So we're going to have to gauge that accordingly. Because in between an 80% range, there's going to be one level that reacts, and it's your job to find that level. If you don't find that level, it's okay to not play it. You just got to wait for your time to play the market. We're putting in a bearish retest of support. Previous, we were putting in a bearish retest here. We haven't been able to put a bearish retest here because we haven't lost the support yet. Now we're starting to lose it. Now we lost it. If this one day closes below, we've then lost it. So any retest up is a short down because it's a bearish retest. So you're going to play it just like you would up here. A little bit here, a little bit here, heaviest above, and you'll look to short it like that. On the one day, we're just going to let price develop. And now we know, okay, there's a low here, right? So now goes back to what you think is going to happen. What's your directional bias intraday? What's your directional bias on the higher time frame? We just swept this wick low. If the one day continues to hold this level, we can look for a long up to the bearish retest because that's a good risk to return play. Why? Because we just moved down over 40% to the downside, 43% almost. So don't you think there's a possibility that the price can move up 41% before moving down 20%? Or do you think we'll just keep moving down and down and down and down? I think that the price is going to move up before it moves down, right? So now we're going to look for reasons to get long. And now we've swept the wick low that held. We didn't look to long this. We missed this move, obviously. So now we're looking along around these levels. I'm going to take out my long tool. I'm going to say as long as, yeah, I'm going to put a looser stop loss for the sake of the example, but as long as we keep holding above this level, that's a long. It's perfect. It's just perfect how it reacts. Understand other types of confluences, guys. We had liquidity right here. We swept that liquidity. We're holding the one day above, so we're technically holding support. There's a support level here that we're creating that's just forming. It's not yet confirmed, but it might confirm, and you want to be in for the long when it does confirm. And right here, it does confirm in the price, guys. And when I look at the lower time frame, there's probably going to be more sufficient evidence for us to long that level as well, like an hourly divergence. Yes, there's an hourly divergence right down here, right? There's an hourly divergence in the price. We're anticipating demand right here. We move back up into the level, and then we're looking along. On the lower time frame, we probably flipped the. Okay, I can't even look at the lower time frame there. Yeah. All right. So clearly, I mean, we had the liquidity. We sweep liquidity. We printed our support right there just based off of us assuming what's going to happen intraday.